Welcome back everyone. Today, we're diving deep into the outlook for US stocks in November 2024. The markets have been a bit of a roller coaster recently, with factors like inflation, interest rates, and corporate earnings all playing a part. So, is November a good time to invest, or should we wait it out? Stick around as we break down what experts are saying and where you might find opportunities in the stock market this month. Current market dynamics. Let's start by setting the stage with the broader market environment. The US economy is still dealing with high inflation and ongoing interest rate hikes. The Federal Reserve's current stance remains cautious, as inflation, though lower than last year, has been sticky and persistent. The Fed's efforts to control inflation through rate increases have led to slower consumer spending and raised borrowing costs, creating a mixed outlook for economic growth. Experts like those at BlackRock mention that while high rates could cool inflation, they're also impacting corporate profits, especially for sectors like real estate, where borrowing is fundamental. Despite these pressures, certain sectors remain resilient. For instance, the technology and infrastructure sectors have shown strength, largely thanks to the AI boom and a general shift towards digitalization and sustainable energy investments. Recent market correction and buying opportunity now. Here's where things get interesting. In late October, the S&P 500 took a bit of a dip, down by over 5% in just a few weeks. While that might sound concerning, history tells us that such corrections are common and often create buying opportunities for long-term investors. For example, the Nasdaq recently reported that, on average, the S&P sees about 3 corrections each year, often followed by market recoveries as investor confidence returns. Research suggests that large dips in market sentiment, often measured by the Volatility Index or VIX, have historically led to positive returns within the next year. The VIX spiked this October but quickly fell, which might hint that a market bottom is near. Of course, corrections don't guarantee future gains, but if you're a long-term investor, these periods can offer attractive entry points in high-quality stocks at lower prices. Sector analysis. Where are the opportunities? So, where should investors focus their attention? Analysts are particularly excited about a few key sectors that look set to outperform in November and beyond. First, let's talk about technology. The AI wave is not just a fad, it's transforming industries from healthcare to finance. Companies leading the AI charge, like Nvidia, Microsoft, and Alphabet, are expected to benefit from continued demand for AI-driven solutions. In fact, some estimates suggest the AI market could grow exponentially over the next decade, as businesses look to integrate AI into their operations. BlackRock notes that the US stock market remains overweight in these sectors, particularly as productivity gains from AI are just beginning to unfold. Then, there's infrastructure and renewable energy. With government support for infrastructure projects and a push for renewable energy, stocks in these areas are positioned to gain momentum. Companies involved in green energy, such as solar, wind, and electric vehicle technology, could see significant tailwinds. The Inflation Reduction Act is helping funnel investments into renewable sectors, creating growth potential for companies involved in solar technology, electric vehicle infrastructure, and energy-efficient technologies. This trend offers opportunities for those interested in both growth and sustainability-focused investments. However, it's crucial to consider that high valuations, particularly within the tech and AI sectors, mean investors should still be selective. Focusing on companies with strong fundamentals and manageable debt levels is key to navigating any potential volatility. Corporate earnings and economic growth. Now, let's talk corporate earnings, which can be a big indicator of where markets are headed. As of October, earnings have been a bit of a mixed bag. Tech giants like Microsoft and Google posted strong earnings, thanks largely to their cloud and AI divisions. But other sectors, like consumer goods, have shown weaker growth due to inflationary pressures affecting consumer spending. November will be a critical month for corporate earnings as more companies report their Q3 results. Investors are watching closely to see if earnings justify the current stock valuations, especially in high-growth sectors. If earnings continue to come in strong, this could be a catalyst for market optimism, potentially making November a favorable time for investment. On the economic front, experts like those at BlackRock mentioned that despite potential economic challenges, sectors tied to infrastructure, energy, and technology will likely see continued capital inflow. However, keep an eye on factors like unemployment rates, consumer confidence, and housing market trends, as these could indicate whether the economy is headed for a soft or hard landing in 2024. Investor strategies for November. Given the current market landscape, here are a few strategies to consider for November 2024. 1. Focus on high-quality stocks. With market volatility in play, sticking with companies that have strong balance sheets, consistent cash flow, and competitive advantages can help you ride out market fluctuations. Blue-chip stocks in the tech and healthcare sectors, for instance, have historically been reliable, even during economic slowdowns. 2. Diversify across sectors. While tech and infrastructure may be hot, diversification is always wise. Consider including sectors like healthcare, consumer staples, and energy to balance out the risks. For example, healthcare stocks tend to be resilient during economic downturns and offer defensive qualities that can stabilize a portfolio. 3. Stay long-term focused. While it's tempting to trade on short-term market movements, a long-term approach can help you avoid the pitfalls of market timing. Historically, investors who stayed invested through periods of volatility have outperformed those who tried to time the market. 4. Consider dollar cost averaging. If you're unsure about entering the market all at once, dollar cost averaging can be a useful strategy. By investing smaller amounts consistently, you can reduce the impact of volatility and average out your purchase cost over time. Final thoughts. So, is November 2024 a good month to buy US stocks? The answer really depends on your investment strategy, risk tolerance, and long-term goals. While the market may face near-term headwinds, sectors like AI, infrastructure, and renewables could provide solid growth opportunities. Remember, the stock market is always evolving, and staying informed is key. Thanks for tuning in. If you found this video helpful, don't forget to like, subscribe, and hit the notification bell for more market insights. And let us know in the comments, are you planning to invest in November, or are you waiting on the sidelines? See you in the next video.